Good morning and welcome to Bazaar Morning Call. I am Anuj, with me Sonia and Surabhi, and once again a market which is running in two parallel universes. Yes, the large cap index, which is quite okay, and the mid caps, which are capitulating. Let's see which way things turn out. For now, the SGX Nifty indicating a bit of a downward start. Good morning.
Hi Anuj, good morning.
Good morning, Sonia. Good morning, Anuj.
Good morning. The trend is on the downside, right? I mean, you see it on the screen. You see it with the numbers as well. There was selling both from FIs and DIs yesterday. And I was just looking at the numbers. 400 stocks hit, over 400 stocks hit 52-week lows yesterday. And not just your vulnerable names, you know, names like MRF, M&M, Imami, Coal India. So a bit of a concern there. And also, you know, 250 stocks hitting lower circuit yesterday. Anuj, I know no levels on the Nifty are sacrosanct right now, but do you expect to see further bleeding as far as the mid caps are concerned, because that is the sore point for the market?
Yeah, you know, Sonia, the issue is, you know, this is now happening on a daily basis, and we've been making this point. Broader market feels like 9,000. The Nifty might be 11,000. I'll make a distinction here between the sort of positional trade here and intraday trade here. That distinction is extremely important. I think the market has made a hard top. What is a hard top? Just like the market made a hard bottom on the day of the election results, when that day's low didn't get violated, and on bad news the market made a bottom. This time the market may have made a top on good news, which was the rate cut. So that day's high now becomes your sacrosanct top for some time. If that is taken out, then again perhaps the bull market resumes. But the Indian equities, and that's the positional view, the Indian equities now have two parallel markets running. One is the mid-cap market, which is in a bear market. And, you know, that includes the good quality, high pedigree stocks as well, like the Ashok Leyland, Motherson Sumis of the world. They are in a bear market. Absolutely no one should have any doubt about it. But the Nifty is still in a mild bull market. So, and then, you know, that's continued. That's happened for some time now. So there's no reason to believe it cannot continue. At some point, the two markets will converge, but you cannot time it. You can't say that, okay, because at some point it will converge, let me now position myself for it. The market will give you an indication that when that is converging. Right now, for today, and having made that distinction very clear that the market's made some kind of hard top, just for today, the risk reward might favor a long trade, and that's because of after yesterday's action. The Nifty did take support at 10,850. That was an important level to watch. It's right in between the 20 and 50-day moving average. So the long trade may just work with 10,850 as a stop loss, and on the bank Nifty perhaps 27,080 thereabout as stop. That long trade may work just for today. But one area that you have to be completely clear of is all these pledge shares issues and, you know, the mid caps and all, because over there you don't know what's the next gen irrigation on the next Apollo hospitals, and you don't want to be, you know, left holding that.
Morning, Anuj. Yeah, so taking your point on board, I was just looking at how Asia is doing this morning. Fairly mixed. You've got flattish cues from markets like mainland China and Hong Kong. Japanese markets obviously have opened out after a holiday, so they're playing a bit of a catch-up. SGX right now, for what it's worth, is down 0.25%. Couple of talking points internationally. One, obviously, is the U.S. government shutdown. We keep hearing maybe deal, may not be a deal. Second, of course, trade talks. Interesting takeaway, by the way, from someone who's watched the global economy up close for so long, noted economist Paul Krugman. And he's again gone in the camp which is rooting for, or not rooting for, basically expecting a recession in the U.S., citing a lot of points about how once this tax stimulus really wears off, there might be pain and pressure that the economy feels. Not just that, in fact, his call, you can take it or leave it, is that the U.S. tech growth bubble, quote unquote, perhaps is also beginning to deflate. So those are some sort of, you know, concerning viewpoints that are coming in. But anyway, that's on the, you know, slightly more medium term. Back to today, Anuj. Today, I mean, if you're looking to play a bounce, is it a bounce on the Nifty? Is it a bounce on the bank Nifty? And on the bank Nifty, we also have an event, right? There's the Sooty stake sale that's going to take place. 3% is what they're looking to sell. How does that weigh in on the market today?
I think that's an important reason that I believe that the bank Nifty today gives you a very interesting trade. The Axis Bank, you know, Sooty stake sale. This is not a block deal, actually. You know, I made an error here. It's an OFS, so we'll remove that. But there's a good chance that because it's an OFS and because the market knew that you know, it's going to happen at some point, today's low being bought into, and you know, you'll be able to see it on screen. What are the price at which the bids are being given? There's a floor price of 790, and there would be bids, of course. So there's a good chance that, you know, this low gets bought into. It's corrected 3% from its highs, It's been a strong stock, so it may bottom out today. But you know what's happened over the last few days is there's a lot of buying which has happened in the big ones, HDFC Bank and Kotak, and they have taken over the leadership for now. Now, if Axis starts to participate from the lows, and if HDFC Bank and Kotak remain strong, the two other stocks to watch, right? ICICI Bank and SBI, they have been the weak stocks. Both of them have now corrected to very interesting support marks. ICICI Bank at 350 and SBI at 280, historically important support levels to watch out for. So, you know, that's what makes me, you know, feel a bit confident just for the day. That, you know, because the mood is so bearish and, you know, early morning perhaps there will be a lot of shorts. And if they don't get follow through, second half today could actually be very interesting and perhaps may even see a bit of a rally.
Okay, so perhaps expect a rally in the second half. In the second half of trade, you also have some macro data coming out, so keep an eye out on that. There's the CPI inflation data that will come out, expected to be muted as it has been. And also the industrial production for December is expected to come through. And there's a month-on-month improvement that the street is factoring in. So let's do one thing. Let's take a look at what our wise experts have to say as we head into trade this morning. And then we will get you some more cues. Bijay Kumar of Deutsche Bank says generic strategy of index heavyweights to outperform broader universe during uncertain pre-election phase is not statistically meaningful. The top quartile of the current Nifty constituents have underperformed the Nifty mid-cap index in 2 of the last 3 pre-election quarters. Of the key Nifty constituents, 2 stocks that have most consistently outperformed ahead of the elections have been L&T and Maruti. Stocks that have consistently underperformed during the pre-election quarters are HUL and Infosys. Deutsche Bank expects the announced rate cut and pre-election spending momentum to turn incrementally favorable for domestic rate cyclicals in the coming months.
Okay, let's get you some money market views as well. Bhaskar Panda of HDFC Bank says there's a lot to worry about as far as global markets are concerned, and Indian currency markets were rather benign given this background. He says today may be another day of consolidation in the USD INR market, and the pair is likely to trade in a range of 71.20 to 71.40.
And on the bonds, Bhaskar Panda says the Reserve Bank has announced a sale of bonds of various maturities, and CPI data is also around the corner. Given this background, he expects the old 10-year benchmark yield to hover around the 7.5% mark. He sees a range for the day at 7.5 to 7.55%.